Hey guys, welcome to the recap video. I hope you're having a great Friday and you are ready for the 3-day weekend because it's Memorial Weekend or Memorial Day on Monday, which means 3-day weekends, which means markets are closed on Monday, so no streaming on Monday. All the more time to review your past trades. I know I'm going to be going through Trade Journal, looking through all of my stuff, especially my recent trades, and see how I can perform even better. I actually had a funny comment come in. I think it was yesterday, and under yesterday's recap video, and it was basically like, Alex, why don't you consider trading with $28,000 and then using the $3,000, kind of doing the $25,000 challenge just with the extra $3,000. That way you wouldn't be under any pattern day trader rule. So basically I could now do the $25,000 account challenge in a margin account, but I'm not limited to any sort of trades. But I'm using $28,000 to start growing my account, or actually just the $3,000 on top of the $25,000. So I avoid the pattern day trader rule, which actually got me thinking that's actually kind of a great idea. It's something I would probably consider if maybe in 2 months from now everything keeps on working the way it is. I think the challenge is going really, really well. This month has been a little bit of stagnation for me. I've been trading a little bit sloppy. I felt like I had to catch up since I was being sick, which just really made me trip over myself. And then I kind of lost my groove a little bit. So the challenge has been this month going fairly slow for me, which is totally fine. I'm in zero rush whatsoever. But I think a big part of this challenge, or a small count challenge, is to understand yourself, understand the trading style, understand the strategy, and really mastering that so you don't make any mistakes with a lot of money. And I would say for that, we've definitely completed that part. I mean, we're profitable month over month and we're making money consistently, just a little bit slow. And honestly, the biggest issue, and you guys probably know this if you watch any of my recap videos, is the fact that I'm limited to 3 trades per day. We grew the account from $4,000 to almost $7,000, even with paying ourselves every month from the account. And I basically we're roughly around $6,000 right now, and I basically divide that into 6 position sizes. So every day I'm trading 3 trades with $1,000 each. And you guys know that the hardest part for me to do that is the fact that sometimes when I'm trading, I hold a position too long, or I hesitate on a position because I'm like, I only have this one trade. And that might make me really do a bunch of stuff that I should not be even thinking about, because it's these artificial limits that should not be affecting or should not be a factor in your trading style, which I totally agree with. So one thing of finishing the $25,000, let's say we do it, the slow, and I guess you could say traditional way, just growing your account over $25,000, kind of brings a new challenge to the table at one point, because once you're over $25,000, you now have to learn how to trade with unlimited trades, which is kind of a whole new kind of aspect to the $25,000 challenge. So as long as you can prove, let's say for 3 months that you're or maybe 3 to 6 months, that you're consistently profitable, or at least managing your risk. So every time you do maybe have a red month or whatever, it's no more than maybe a few $100. I think if you can get to that point, then there's no problem with adding, $25,000 to your account, but still trading your account the same. So still trading with, let's say, $1,000 position sizes, just first dealing with the unlimited trading aspect of things, seeing if you can, not overtrade. And if you can manage that, then, naturally going up with your position sizes, basically growing the account the same way as you would with a, sub $25,000 challenge account. If all this $25,000 challenge stuff does not make any sense, definitely check out the video right here, the $25,000 challenge. It'll put everything in perspective, but in a nutshell, in the USA, if you have an account under $25,000, you're limited to 3 trades per week, so per 5 business days. And that is a horrible thing if you're trying to be a day trader. So what you do to get around that is you move your money into a cash account like me, and then you can trade unlimited. The problem is it takes 48 hours to get your cash back after a trade. So if you trade $1,000 on Monday, you won't be able to trade that $1,000 again on Wednesday. And that's why I do this whole account division thing, where I divide my account into certain position sizes. So yeah, I'm going to keep the challenge going like it is. I think it's going great. And like I said, I'm in no rush. I like this kind of learning atmosphere, and I think I could build the account naturally this way. Yes, I do think it would be adding a kind of interesting element to just kind of throw in, let's say, $25,000 to my account, but mentally not use that $25,000. I think that would be actually a really, really cool way to take the challenge. Maybe I'll do it, maybe I won't. I don't know yet. I have not decided. For now, I'm going to continue what I'm doing. Let me know your guys' thoughts. Do you think I should actually just add $25,000 to my account and then really kind of learn the second part of this $25,000, which is dealing with unlimited trades? So I think that would add a cool dimension as well. But for now, I'm going to keep doing it for probably at least a month. And then maybe I'll just keep on doing it. But maybe if enough of you guys think that that's actually the way I should go, I'll consider that as well. All right, guys, I know that was a long intro, but I hope you found some value in kind of that, thought process and kind of that idea on how to also do the $25,000 challenge, but without limiting yourself to fixed trades. Let's go to the charts now. It wasn't the craziest Friday, but definitely some interesting moves out there and also some pretty cool pre-market activity. So we'll talk about that plus a pre-market trade. So before we dive into the charts, don't forget to leave a like if you enjoy the content. If you're totally new here, we go live every morning at 9:15 a.m. to review the watch list and then trade the market open. I would love to see you next time. So don't forget to subscribe and hit the bell icon too. And I'll see you guys first thing on Tuesday after the Memorial Day weekend. I don't know why that's so hard for me to say. Let's go to the charts now. Hello guys, welcome to the recap video. So we got XSPA, which was our kind of main lead gapper on the day, turned out. So NAVB was kind of the original main lead gapper, but we just didn't have that follow through with it that I was hoping for. And then NVGS, we'll talk about a little bit as well. But here, XSPA, really kind of performing nicely here. And let's quickly look at this one a little bit, because I think this one's going to be a nice little afternoon runner or late morning runner. I'm not sure by the time you're watching this how if it's still going to be a good option, but basically 137% gapping up here. Actually, this isn't totally pre-market, so kind of in this area. Let me scroll back a little bit. Yeah, about 100% gapping up pre-market, and then quick little pullback here, and then instantly into the market open up 22%. So this was a really sweet move on XSPA. It had a really nice what was that float? I remember it was something. Yeah, that's what it was. I remember there was something fishy about it. 108 million float. That's kind of on the high end. We typically look for floats under 50 million and ideally into the 10 million range. So this is a pretty big float. And I think if the float was a little bit lower, it could have, really exploded. But basically, they got some news. They got some new. They basically JFK. They had a deal with coronavirus testing kits. That sounds pretty hot. I mean, everyone knows JFK, the big airport in New York City. So providing testing kits to the whole entire airport seems pretty big. So let's see how this performs in the afternoon. We found somewhat of a bottom here at 0.7, and then we kind of ripped up here nicely 30%, had a little bit of a pullback here, and now it looks like we're having a continuation. So this is what I'm watching a little bit, because I have a little bit of an IRA position in this one, but I'll probably be closing out this position fairly soon here, either into a test of $1 or I don't know, as we break lower here. Not totally sure yet what I'll do, but that's kind of, I got my eyes on it. Actually, you know what, I'll just show you the entry. I don't want to mix you guys up too much, because I'm doing a little bit of, I have my IRA account, which is kind of my, swing trading and some of my other things, or sometimes later day trading. And then I have my obviously challenge account. So I don't always want to confuse you guys, because these recaps are primarily focused on the challenge account, the gap and go strategy, because that strategy, if you learn that strategy, the gap and go, you'll find a lot of hot stocks that you can apply other strategies to, and you're going to have a lot of freedom to kind of mold it in any way you want. But knowing how to search for stocks, knowing how to scan the market, knowing which stocks to be looking for, what to be looking for in terms of float, catalyst, market cap, dollar volume, all that fun stuff, kind of putting it together, trading the gap and go strategy, but then also being like, okay, well, maybe I want to maybe swing trade some of these. Maybe I want to buy dips near support on some of these. Maybe I want to short some of these. So there's so many things you can do off of that strategy. That's why I kind of want to focus the YouTube channel, obviously, on the gap and go strategy. Plus, it's a strategy that I want to learn a bit more for myself. We're already, several months into it. So XSPA, let's talk about NAVB, which was our lead gapper on the day. 171% gapping up in the morning. 10 million float, US biotech with positive trial 2 data news, phase 2 trial news. So this thing, everything about it was looking pretty hot. I just felt like it was super overextended pre-market, and that's why I didn't really want to get too aggressive out of the gates. We had one minute pull up here, and then instantly we pulled back. This was about a 10% move. I was expecting a little bit further of a dip, maybe into the 70s or even high 60s is what I really wanted. So one more of these red candles. would have been perfect. I would have got long. Maybe we had a red to green move. It would have been pretty sweet. We didn't really get that. We kind of had a red to green move here. And then when we broke past 3, I was like, okay, this is looking good. Maybe there is a little bit more volume back in on this. So this candle broke so fast, I missed it, but I luckily got the dip at 317. We bounced back here up. I was about, 3-4% up. But then instantly it, did not continue and started flushing down. And that's why I got out at 305. And I was like, oh man, that could have been a good move, but it didn't work out this time. So whatever. Yeah, you win some, you lose some. This one, I luckily cut my losses very quickly. But yeah, I kind of missed that. I don't know. It's just, it is what it was, or it is what it is. Whatever. Anyway, this thing started pulling back here. Eventually it was at 205, 2.5, tested this area. Wasn't really a strong bounce. And then eventually we cracked this area and started falling to the downside. And this is when I was like, okay, we cracked it with low volume. Key multi-month support and resistance zone at 2.5 plus a $0.50 zone, always important. But we didn't really, there wasn't a lot of selling volume. The selling volume basically faded off here, and then it looked like we were maybe pulling back up. And that's when I actually entered on this candle. I was looking for a reversal back to the upside, which can be really good. And you know what? That's exactly what happened here. This was a 12% move. So I had everything right, timing right, or not the timing, the idea, my thesis was right. Honestly, this sell volume was what I was waiting for. I had the limit order right down here the whole time. I didn't have it waiting, but I was just, if you watch the stream, I was like ready to go. And then we didn't get that, and I was like, okay, well, it doesn't look like it's going to happen. That's totally fine. Sometimes it doesn't dip that hard. And then it did, and I got out on this candle because, you just got to manage your risk. Unfortunately, only, never pulled back past my max risk. So I could have held through this. But then, if this candle, and we get another one of these, all of a sudden I'm down 10%. I didn't really want to be part of that, so I closed this position. It wasn't really that big of a loss. It was just kind of annoying because I ended up technically being right. I just traded it wrong. So yeah, there's not a lot I can say about this. You win some, you lose some. And this one, again, I guess I was a little bit too eager beaver. I mean, waiting for us to maybe pop back above the 2.5. I don't know. It's kind of tough because that's half the move already, and I'm already trying to buy this on a dip. I'm not trying to buy this on a breakout, so I can't really be buying it here, right? If anything, I would have bought here and got faked out here or something like that. So I don't know. Maybe waiting for this kind of green candle to come in, having this pullback. It's easy to say in hindsight, what you should have done, but overall, moves like this, I typically get pretty well. I like the dip ones, but this one just didn't really perform very well. NAVB, honestly, if this thing stops pulling back and starts pulling back a little bit higher, it wouldn't be maybe the worst potential trade in terms of later day, because positive trial news, phase 2 news is typically really, really good. I don't really like how the long-term chart, a lot of the spikes to the upside don't hold very well. So that's one thing to consider. Although sometimes we have a little spike up and then we have a nice little continuation. So this one as a swing trade could be kind of interesting, but I'm not going to be swing trading it, mainly because I don't have, well, actually I do have some funds available, but most likely I won't be swing trading it. Yeah, so NAVB, I don't know. For a gap and go, it was a little bit unfortunate that we didn't get that continuation. For a swing trade, could be interesting as long as we start making some moves higher. But I would probably be buying any sort of dips, and I would probably start cutting my losses if we dip below $2. Because once you dip below $2, then the next $0.50 range is coming up at 1.5, and then you're going to be down a good bit. But as long as we hold above 2, could be an interesting stock. Otherwise, I don't know. I probably won't be trading it anymore. We had quite a few stocks making moves today. We had TTPH that I was looking at. This one wasn't really the most interesting. I didn't really like that, pre-market was selling off so much. It was not really that enticing of a stock for me. But as we held the highs here and then we broke out higher here and had a nice pullback back to the $3 zone, I was like, okay, this looks pretty good. What I should have done was probably buy a little bit into the consolidation here near the 2s. This would have helped me be a little bit more confident in the breakout, knowing that I have a bit healthier of risk management. Even though you typically don't want to be buying something premature, but this thing is in a pretty healthy, nice uptrend. So I would have been kind of confident with that. And that was kind of my original plan, but then I kind of snoozed through this. I think I was looking at a different stock. So yeah, this one, nice bull flag here, breakout. I basically wait for a little pullback, get the pullback, you know, everything about this trade was right. I just kind of got shaken out on this little dip here, which is kind of ridiculous. And then, you know, this thing runs up only another 4 or 5%. So it would have been not the best trade, but still I could have walked away, you know, I could have made 50 bucks off of this one, or 5% based on my position size. So it could have been a nice little way to end Friday, but it would, I honestly felt like with the kind of weird catalyst of an offer to buy another company, it just felt like a weird stock. And I didn't really want to get super aggressive on it, and I knew it probably wouldn't be a home run trade or anything like that, but you know, a little bit of upwards momentum here, big resistance above though, but you know, it could have been all right. I mean, we had two good little kind of scratch trades on TTPH in the past, but you know, definitely some potential there. I don't know, today was just kind of a weird day. It was just a lot of selling off, a lot of kind of shaky moves. At least maybe that's how I felt about today, but I could be wrong. I don't know. I'm sure some people really slated today, but I kind of missed SMDL. I think the SMDL was a really hot one. This one out of the gates broke higher, consolidated, started pumping up here. I think this one pullback was when I was potentially about to get on it. And then instantly rocketed back up and then got halted. I kind of missed this whole 30% move. And after that, I didn't really feel comfortable trading it anymore. Maybe putting a limit order here at 1.505 would have been good, because this is clear support and resistance. And there's, you know, oftentimes there's at least another retest here before there's a bounce. There's actually two retests here. So this one bounced 10% and then boom, this one was 15%. So we could have made, you know, two 10% trades right there. Just kind of trading the wrong stuff today. I traded one more thing today. So we ended today red, $69. Not really the worst day, just kind of like just shaky. It was just shaky. So NVGS, this was another lead gapper. Hasn't totally fallen off of our scanner because it just has not been performing. 60% gapping up pre-market. So let's just talk about this one very quickly here. So pre-market looking okay, 60% gapping up, 3 million float. That's nice. That has a big spikeability. It's an Israel med company, and they had some really, you know, good sounding catalysts. And this is why I say don't get over fixated on the catalyst, because you might think it's good, but in reality it could be horrible. So I thought this catalyst was good. First kind OR ready wireless endoscopes for surgery. So it sounded pretty good. I mean, here it is. Achieved breakthrough with healthcare's first of a kind OR ready wireless endoscope. I don't know. Obviously don't know much about this industry in terms of the medical industry and endoscopes and whatnot, but you know, sometimes you see similar catalysts where, you know, especially when, I don't know, 3D printers are hot, or there was just a 3D printer that came out that can now do like circuit boards and stuff. And that news absolutely ripped. I mean, that company went up like 300%. So, you know, sometimes, you know, new products, or especially products like this that, you know, can affect a big market, could be very hot. But in the end of the day, you got to be looking at the charts. So with this news, I thought, okay, this one has good potential. So I decided to try to trade this one pre-market. Took a really small position size, only 200 shares on this one. It was more of just like, let's just see what happens. So here we try to break 3.5, which is multi-month support and resistance. We couldn't do it. We pulled back to this area, tried again, and I was like, okay, well, this is looking like we have a little bit of an uptrend. So here we broke the 15-minute EMA. I go long. Unfortunately, it instantly pulls back again. I'm down like 2%, but I'm like, whatever, that's fine. I mean, as long as it doesn't break 3.5. That was kind of my thesis. We start trending higher here. This is looking good. I'm up, you know, several percent now at this point. 2% maybe, and then I'm waiting for this crack of 3.7. This was kind of my goal. I wanted to sell into a VWAP breakout, so maybe around before 4 into like 390s I would have wanted to sell. It didn't happen. Consolidated, broke back here, and then, you know, just kept on selling off. So 4 trades today, kind of funny amount. 3 were red. It was actually, I haven't had 3 red trades in a row in a while, so kind of a crazy situation. But the fact that I had 3 red trades in a row and I just didn't lose that much money, it was still a small red day, is good. It shows that my risk management is sharp, is on point. But the only that bird almost flew in the window. The only problem is, you know, that last trade, I taking profits a little bit too soon, and sometimes get shaken out of these afternoon trades. So, you know, good and bad today. Just overall not really the hottest day. And talking about one more little thing here, NAVB, if we just go back to this one's starting to curl up a little bit, kind of looking somewhat interesting. Could be a fun little, again, this is what I was talking about. Could be a fun little afternoon trade. So yeah, 228 started holding. I would probably look into this one for a little afternoon trade. I don't know if I'm going to be in it or not, but you know, those are, I know some questions stay in the chat room, like, I mean, what do you look for a swing trade? Obviously lead gappers that are kind of holding their highs on good news. First screen days are quite nice. Looking really kind of consolidating near the highs. So just like I look for a pre-market where you're getting some consolidation above VWAP, that's what I'm looking for. NAVB is not having that consolidation above VWAP, but for now, I do think we might have a VWAP test, and that alone, you know, could be a 10-14% move. So that wouldn't be that bad. I don't know if it's going to be a good overnight. No idea. Could have a dark public offering later in the day. You know, the longer you trade, the more you expose yourself to just market risk that there's going to be news, and it could be bad news. So that's why I like to focus on really just the morning. But yeah, I mean, there's so many things you can morph this gap and go strategy into. So it's all up to you guys. This is just, you know, what I want to be focusing on the first kind of 45 minutes specifically, and then really, you know, easing off the gas. And I feel like I've been making a lot of mistakes because I've been trading a little bit later and then just trying to wrap up. But I don't know. I've talked about it plenty of times, so I won't go into it too much in this video. For now, I'm going to enjoy the weekend, guys. I need a little reset, so I'm going to have some good fun. Got some tacos planned for later. So I will see you guys first thing Tuesday morning. Monday, the markets are closed, so I won't be streaming. Don't forget to leave a like, guys, if you enjoy the content. And yeah, guys, like always, stay safe and make some awesome trades. Till next time, ciao, ciao.